We've just made $45 off those two bets together. $54 off that bet. We lost $8 to get the bonus. We turned the bonus into 108%. That is the upside of match betting right there, explained in a video. Entered into the horse promo method. I've turned the bonus over and we've now made 45 bucks. Bang. Before we get into this, I want to put a disclaimer on this because this is an intermediate match betting tutorial, meaning that if you are new to match betting, I would not recommend doing this method until you've learned the basics. You will lose money, I promise you, because it's easy to make a mistake with this more complex type of match betting. If you want to learn the basics, we have a free course. 6 videos. The first 5 videos go for 32 minutes. As well as that, we give you a free bookie list with bonus bets on them, give you odds chart, calculators, and spreadsheets, which you can track everything and make sure you're on track. If you need personal help, we also offer a free call service, which we've done over the past 5 years. You can find everything in the description. If you want to watch this tutorial and you're already match betting, I hope you learned something from it. We go into some in-depth strategies and techniques. This has been taken out of our platinum member community content, where there's extra 15 hours of content on top of this one. We have 1,650 members in there, and we've made that community over $50 million over the past 5 years. If you have any questions, feel free to ask them in the description, but hopefully you'll watch the video and learn something. Cheers. I'm going to teach you the horse promo method. I want to start this video off with a hypothetical example, talking about a 3-sided dice. On this dice, there are 3 possible outcomes, and I'm going to tell you that on one side of the dice, you're going to lose $4 every time that dice hits. On the second side of the dice, you're going to lose $8 every time that side of that dice hits. And on the third side, you're going to make a profit of $32 every time that side hits. Now, if I gave you an opportunity to play that game, would you play that game? Yes or no? Well, if you're sitting there confused, you probably need a lesson in expected value, because fuck yes, I would play that game. I would play that game over and over and over again. And why I would play that game is because my upside, my potential to win, my potential to profit is much higher than my potential to lose. The profit of $32 on that third side is 8 times more than the first side and 4 times more than the second side. So of course I'd play the game. If I continually play that game over and over again, and I have a consistent bankroll and I stake the same amount of money every single time, I am going to profit in the long term. That is mathematics, right? My upside is greater than my downside significantly. Now I'll give you another hypothetical situation. It's 3-sided dice again. This time, 3 outcomes are a loss of $25 on the first side, a loss of $8 on the second side, and a profit of $20 on the third side. Would you play the game? Yes or no? And why? Pause the video and answer it before I give you the answer. Personally, I probably wouldn't play that game. In fact, I definitely wouldn't play that game because there's better games to play, right? I personally wouldn't take my chances there because, as you can see, on side 1, you lose 25 bucks. On side 2, you lose 8 bucks. And on side 3, you only gain 20 bucks. So on 2 of the outcomes, I am losing money, and on one of them, I'm gaining money, right? But on one of those outcomes, I lose more than I can potentially win. Therefore, the game has a higher downside compared to a lower upside, meaning that in the long run, if I was to stay consistently, that game would result in me losing. This is essentially the game you would play if you went to a casino, or if you played the bookies without promos and you didn't have an edge. You are going to lose long term because they have the edge. In this video, I'm going to teach you the horse promo method, and the exact principles that I use there, comparing upside versus downside in those hypothetical situations, are going to be relevant in the examples that I'm going to teach here. Right, let's get into it. I'm just going to show you a horse promo method just on Flemington here. We've got a race with, looks like we have 8 runners. No, we have way more than 8 runners. Let me look. Runner number 1, 2, 3, 4, 5, 6, 7, 8, 16, 2 missing. So we've got a 14 horse field here. So probably not the best race to be entering into a horse promo method. However, I will show you, we're going to get the race up just so we can actually see what's going on. Obviously, we have a little bit before the race starts. So what I'm going to be doing here, I know that 450 and sort of 520 would be okay, I think. But just having a look, Barrakill is definitely one to look at. In this kind of race, obviously, you're going to be having to look at higher odds, like Wolfie 850, 960. She Light is, what I'm going to do is reorder these by, so it's matching up, so it's much easier. I'll take Barrakill actually, and then basically what I'm going to do is put a 50 on it, and then I'm going to lay that for $7. And remembering with horse promo method, we're going to be laying 45. Now I should be already in this market, but I'm not, so I'm just going to sit it in there And then I'm going to press take SP as well. There's a bit of a glitch. I'm sitting in here. Now that'll get matched while we wait for this. So they're putting them in. I'm sitting in here. 45 of my dollars is sitting in here. Now, obviously with the horse promo method, we are looking at trying to lay 90% as long as it falls within an underlay. Now, what I'm going to do is take 720, and I'm going to get my bet matched, see if it updates, see if we get in now. I've changed that late. I'll explain why I've done that in a second. I'd rather get it matched take SP before the jump than take SP. It may not get matched. It's pretty much about to jump, but we are sitting in here. $45. There's a lot of money in this market. $500,000. Bang. I'm not sure what the fuck is happening here, but this is majorly glitching. But it looks like I have been accepted because all of this is saying that, yeah, that is correct. So what we want, I'll drag this over so you can see. What I've done here is I've checked. I've backed at 650. I've laid at 720 in the end. I laid a 7% commission. I put a $45 lay stake. Now this allowed me, first I was in at sevens, but it said I could do 46.90. Obviously with horse promo method, we're only going to lay over 90% max, right? However, I could go a little bit more aggressive. Now, if I'd left that in at 7, I don't think that would have been matched. It would have got taken SP. But I went up, and it still allows me to lay 45. So we are on Barrack Hill, who is currently number 1. I'd say it's that one there. Now, I'm not looking at Betfair. I think it's this one here. Now, obviously, we don't want it to win, because if it wins, I don't think that's going to win. I think this thing's going to win here, if I'm a good judge of horse. But, yeah, it's going to win. All that thing on the inside. Yeah, that thing on the inside just come home like a train. I don't know if Barrack Hill actually placed there. I think it has come third. Is that number 1? I think that's correct. I'll just wait for the result. I'm 90% sure, 95% sure that it's correct. It's come third, and I'll get a bonus. So that would be a correct execution of the horse promo method. Okay, so what I'm going to do is show you this on the spreadsheet, just so we are across it. And I'm going to put this in the spreadsheet, just so we're all good. So while we wait for this, what we did here was we put a bet on. It's the 14th of September, 24, not 23. We had a promo, and we had sports bet. Not sports champs, sports bets. We had racing. It's not a horse system bet. The selection was Barrack Hill. If you want to write Flemington, I would write it. If you want to race 1 Flemington. Stake 50, odds 650. Betfair stake was 45. Betfair lay odds 7. Betfair commission 7. And then the result was bonus. I'm pretty confident. So looking at this, obviously before, what we did was we got this spreadsheet up to show the calculator, right? So just going over it all, just so you're as familiar as possible. 50, 650, closest odds I could get was 720. Lay commission 7. It says I can lay my 90% just. There's still a 58-cent gap there where I can underlay by 58 cents. If we went to 740, this would have been no good. It would have been too much, and this would have then been an overlay. So if this had ended up winning, we actually lose $13 because we've overlaid. However, if it loses, we still get our $8.15. Our $8.15 is simply the gap between 5 and 45, which is 5, plus 45 multiplied by 7%. The 45 multiplied by 7% is $3.15. That is the commission we're paying on Betfair for this horse losing and our bet on Betfair winning, right? So if we lay 720 and the horse ended up winning, look what happens here. We only lose $4. Again, every time we lay a $45 bet on a 7% commission race, we lose $8.15, assuming it's a $50 bet. So in this scenario, you can see the benefit of like knowing the 90% of 40 is 36. Obviously 50 is a nice easy number. We then go up to 45. We're okay, we're within the range, bang. Now this table, I'm gonna make this table so that you guys can use it for horse promo. I'll add it to that spreadsheet which has all of the non-promo all of the bonus turnover so you can actually see the limits of essentially what range you can get these on with. But in this scenario, I'm going to go back to my slip. I'm pretty confident this did place. If we go back here, yes, it placed. So we can see here that Barrakill did place. So that was actually a successful hit. So we've lost $8.15, but now we have a $50 bonus, right? We have that $50 bonus. So moving across, I'll get rid of this calculator. What I'm going to do now is I'm actually going to turn over a bonus with that $50 bonus so I can show you this whole process. So we entered into the bet. We turned over the bet. Obviously, we hit one. It came second or third. Perfect. We got the match on. We got it matched prior to the jump, and we're going to use the bonus bet that we got to actually turn it over and guarantee ourselves $37 and whatever cents for getting that on. And we started looking at this Eagle Farm market before. So what I'm going to do is, obviously we're going to be looking in this 7 to 20 range. Now this is a good race for it by the looks of it. I'm going to reorder the market so I can actually match up what I'm looking at. So 650 and 820, yuck, 980. Obviously still only 21K in the market. We're still 4 minutes or so out, so a bit of time. This should start at about 200K, maybe a bit more. It is Eagle Farm, but it is only still race 2. Probably by about like 1, 2 p.m. Depending, like we're in spring now. It's not quite gone to daylight savings. And we'll see what we can find here. But let's just have a look. So lay down Lily, 12, yuck. 49K in the market now. So we're going to start looking again. The one that I probably want to look at is my pins. That one there is coming in. I will use the bonus, but still gaps. What else we got? Lay down Lily, 9 and 13. Yeah, I'm going to take this. And I reckon I'm going to be aggressive here and go 840. But this is me being super aggressive here. And again, this is doing it a long way out. So, I mean, I could go 860. So we'll leave this open. We have 1 minute and 55 seconds. Obviously, we need this to get to 840 for this to get matched, right? I've obviously laid my 80%. I'm letting the market do its thing. There's a lot of gaps here. It could end up being $10, reality is. But I'm taking my chances, and if it doesn't hit, well, we move on to the next one. But I'm doing what I would do in this situation. So 840 here. 7% commission. Obviously, it says I can lay 42 because that's a really good match. However, I'm going to lay 40 because it's a bonus turnover, 80%. And we are going to get a massive profit here of 108% if we ended up getting this horse winning. I'm backing myself in here for this to get matched. We still have only 42 seconds. I could be more conservative and go 860, but it's already into 860 now. I could go to 860 here, but we're sitting all the way down here. We've still got 32 seconds, back to 9s. There it is, we're into 840. Bang, matched. I'm not sure what's happening with my Betfair and why it's not showing me, but I'm pretty certain that I got that matched at 840. My liability is 296. Which is correct. I got that matched at 840. So there you can see I've turned over my bonus there for 8 and 840 on Sportsbet. The market did move my way, but that's an execution of that. So from that bonus bet that I acquired from that previous race, which is 14th of the 9th, 24. I'm not sure what happened on that previous. We then have Sportsbet again, racing my pins, race to Eagle Farm, 50. It's now into $8. We did $8 and 40 for 8 for 7%. If that was to win, I'm gonna make $70 apparently. No, 840. $54. If it loses, I'm gonna make $37.20. So after seeing that, you can see across just 2 races, 2 sample size, small downside there to get the bonus. Again, if this didn't place, we would have just lost, right? We would have just lost 815. We didn't get the bonus if the horse didn't place before on that first occurrence. If it had won, we would have lost $5. In fact, we would have won $5 because we've underlaid massively. Lay calculator, stake not returned, 50 at 650, 7, 45. lay stake 45. Yeah, we would have made $5. That is correct. And it didn't. It placed. We got the bonus. Bang. And then this horse is now in play. Let's have a look. We don't care if it wins or loses. If it wins, we obviously make more, but let's have a watch.
Crazy try, lady shotgun.
Now, what I recommend, if you're someone who has come from a gambling background and you're still getting over that mindset stuff, turn the commentary off. Because I promise you, it is a cheat code to deleting any potential for you to get attached or emotional. It just adds your chances of becoming more disciplined by turning this shit off. The commentary is fucking cancerous, especially for gamblers. And my pins is 4th. In fact, I think it's this. It looks like that is going to walk in. Yeah, that's home. So we'll actually make $54 off that bonus. So yeah, that's one. So I'm actually happy this won. This isn't a perfect example of the upside to underlaying. And we've just made $45 off those two bets together. $54 off that bet. We lost $8 to get the bonus. We turned the bonus into 108%. There is a lot happening here. I've just shown you the horse promo method. I've shown you turning over with underlaying on a bonus and the advantage to that and what happens when it wins. That is the upside of match betting right there, explained in a video. If you don't understand this, watch this video 10 times, because what I've done there is I've just entered into the horse promo method, I've turned the bonus over, and we've now made $45. Bang. That's the upside of hitting the 80% rule. Going back to this calculator, someone actually texted me this the other day who just joined Platinum, who's been using Betfair for like a year. He's like, bro, you taught me to underlay rule. It's fucked. How did I not do this before? This is massive upside when you do this the right way, right? Let's walk through it again. We've got into our promotion. We've put it on 650, 7% commission, laid at 45. We lost $8.15, but the horse placed, so we acquired a bonus on the promo, the first bet. We then turned the bonus over. We put it on at 8. We got 840. We were patient. So now we have the mass profit. So you've just seen the horse promo method in action, right? You've seen the back bet, the lay bet, the bonuses accumulated, the bonuses then turned over. We make money because our upside is higher than our downside. Over the long term, if you stay consistently with any method that has these exact same principles, you are going to profit long term. Simple as that. Now, the method itself is to back a horse with a second and third promotion. You should know what one of those are now. You then lay the horse on Betfair. You essentially create a two-way Dutch, right? You've created a back and a lay, meaning that no matter what happens, you're going to lose a small amount of money due to the odds discrepancy, but there is a possibility that you are going to have a profit when a certain outcome hits, i.e. the three-sided dice is going to be relevant here. So, horse wins, you are going to lose a small amount of money. Horse loses and doesn't place, you're going to lose a small amount of money, low downside. And then whenever the horse places, because you have a bonus insurance here, you are actually going to have a high upside. So in the position here, you are going to actually make money long term because this upside is much higher than these two downsides, right? They're actually very similar to the example I gave first with the profit of $32 and then the loss amount or the downside amounts of $8 or so at the very worst. So in this scenario, your upside is actually 4 times your potential downside. And that's why this method is so profitable. I'll get into it now, so let's have a look. This is literally match betting 101, right? This is edge and this is positive expected value. When you have a mathematical edge and you apply money management and you apply discipline and emotional control to that money management, i.e. you stick to a consistent unit size and you never change your bet amount, it is literally impossible that you lose money long term. It's not possible because you cannot run out of money if you stick to bankroll management. And because you have an edge, over time, all that's going to happen is your money is just going to keep going up, right? It's not going to happen linearly, but it will over the long term if you have enough sample size, right? There'll be fluctuations on that graph where you'll lose a little bit. You'll miss 6, 8, 10 in a row, 5 in a row, 11 in a row, 20 in a row, even at the absolute extreme ends of variance. But no matter what, over the long term, you are going to profit because it's just math, right? It is just math. Because your upside is much greater than your downside, you cannot lose in the long term. You need to understand this principle because this principle is literally match betting 101. And if you get this, you can apply it to anything else, right? It's really important that you understand this. If you can understand this concept, it'll change the way you think and it'll take the emotion out of what you're doing and you won't stress about negative short-term variance where you miss a few in a row, or maybe you're following the horse system and the horse system might have a small period where it goes negative in the short term. But in the long run, you just know it cannot mathematically lose. Understand this concept, and I promise you it'll completely remove all stress and emotions away from your match betting. Anyway, let's go back to the method. So what you're going to do is you need to understand that the promotions given to you by a bookie for the second and third promos are there to entice gamblers. We already know this. You've been through the How Bookies Operate video. You've understood that. But let's go through some revision here. They want you to bet on horses, right? That's what they want you doing. They want you to become addicted to the habit of betting on horses. So what do? They give you an incentive, and hopefully you become addicted to placing those bets on those horses, right? To dangle that little carrot, they give you the second and third offer. If you bet on this, Harry, we'll give you a second and third bonus back, because that's free money and you can have another crack. That's what they want you to do, right? They want you to fucking lose your money, just lose, get your second and third bonus back, place another bonus, lose that as well, get close again, and then all of a sudden you've placed 2 bets, you get into that addiction cycle, and then you're fucked. And you consistently lose money over and over again, and that's how they create a losing culture, which is Australia, the worst gambling nation on the planet. That's how they've done it, right? And they've done it really, really geniusly. So they want you to bet on horses. They want you to think that you have insurance, right? They want you to then gamble the bonus, and they want you to repeat this cycle, and then they make money. It is literally that simple. So a promotion for a match better, though, you can take their second and third promotion and turn it in your favor. A match better sees this opportunity as a massive chance to make profit and a guarantee to make profit, because the match better, they have a mathematical edge. These promotions that they give us are mathematically giving us an advantage, because we don't gamble the bonus. We use that bonus to then turn it over risk-free and guarantee money. A gambler loses that bonus, or at worst, they win a bit and then they get addicted and then they lose more. And that's how the bookies profit in the long term, right? Bonuses are free money for a match better. You can literally create a scenario where you are essentially creating a two-way Dutch for a small loss, which has a low downside or a lower downside, to gain a bonus, which is then turned into a higher upside. So all you're doing here is applying the principle of lower downside to higher upside and repeating that over and over and over again. All right. Starting to plant the seed. Now we're going to get into the nitty-gritty of the actual method itself. Now, why would you actually do this method in the first place? Now, the last point says making money, but before you actually think about making money, it's actually a really good method to practice your Betfair laying on horses for cash, to practice your laying on horses for bonuses, and then to understand an upside versus downside method and to actually see it unfold, to see 50 bets, 100 bets, sample size. It actually can then give you the confidence to be able to say, well, I can actually understand the math here, and I can see, and I can go through periods where I miss 5, 6, 7 in a row, 8 in a row, 10 in a row, and not be affected because I know it's just math. It's all good and well to explain this to you, but until you actually see it, sometimes it can be a little bit of a struggle to actually believe it works or believe it's real. And until you do it and you expose yourself to this stuff, sometimes it just requires you to actually see it and do it. And then you believe it, and then you can just execute. So that's really good for that as well. And then basically, you're also going to understand EV, but above all, it's going to make you money, right? This method is great for making money. So it's not the best method, obviously not anything compared to the horse system. The horse system shits all over it per dollar spent. There'll be another video on this, and I'll touch on this at the end. But in terms of this method itself, it's a really good method for these points listed here. Understanding how to use bonuses on horses, understanding how to use cash on horses, understanding EV, understanding upside, downside, and of course, making money. Fantastic. Let's move on. So the method, as we said, we're going to back a horse with a promotion, we're going to lay it on Betfair, and then we've got 3 possible outcomes. Either the horse is going to win, the horse is going to lose and not place, or the horse is going to place. We want this one to happen right here. We want the horse to place because we have a promo, and that means we're going to get a bonus. We then turn that bonus over risk-free, and we make money. That is the aim of this method, right? But what you have to understand is not every single time is going to hit. It's not going to always place. It's not going to always win. It's not going to always lose and not place. There is going to be a number of different things that are going to happen. And as a result of consistently staking and sticking to the process over the long term, applying money management, applying the correct rules that we're going to discuss now, you won't lose long term. You'll make money. This method will make you money. If you're not yet aware, we have a free course. All you need to do is watch 5 videos. They go for a total of 32 minutes. On top of the videos, we're going to give you a bookie list, odds chart, calculators, and a spreadsheet. If you want to get that free course, just jump into the description of this video, click the link, and you'll have access to it for free. When you back the horse with the promotion, you're going to back it and then you're going to lay it. Now, we're going to use a $50 bet size here. Now, I know if you just started, you're not going to be betting $50, so please don't go and bet $50. But we're going to use 50 because it's the easiest one to do. The horse promos are normally capped at $50, so we're going to use a $50 promotion. Now, for example, in this scenario, we're going to back a horse at $3 odds with a promotion. So let's just say on a Saturday, you just get a second and third bonus back offer from Sportsbet, and you put that on the horse and you back it with a promotion. Now, you're going to then go and lay the horse on Betfair. Now, obviously, you would have seen the method at the start. I was really quick when I did that. But this is going to require you to understand the, relationship between back odds and lay odds. Now, there's going to be a table that Steve's going to make, and he's going to walk you through the relationship between that. But essentially, what we're going to be doing here is there's a rule for the horse promo method that you're going to know as the 90% rule. We want to lay 90% of the back amount on the horse. I'll go through overlaying in a second towards the end of this video, or maybe a little bit just in a second. But why we want to lay 45 is because we're going to enable ourselves to get a little gap between the back and the lay odds to get ourselves into a position, right? If we back this promotion, we have EV, we have expected value in our favor, we have edge, right? We have a promotion there. So we can afford to lay a little bit higher than a standard cash v cash bet without a promotion. We wouldn't go into a situation here where we're backing and laying 3.3 and 3.30 because that is way too big of a gap for back v Betfair because you're just going to lose money long term. However, when you have a promotion, you can enter into this position knowing that you can lay less. Obviously, when we're doing non-promo cash, we want to lay the same if it's the same odds. But in this scenario, we can actually get away with laying 90%, 10% less than the back stake. And then we can get ourselves into a position where we can take higher lay odds because we want to get into the position to actually put ourselves in a position where we can actually make money by getting the bonus bet when the horse places. So we're going to place the bet. That's your back stake there. And then obviously the back odds are $3. The lay odds are going to be $3.30, 7% commission raise. Let's just say it's Flemington and it's with Sportsbet, whatever. We are then going to lay 45. Now, on these odds relationship here that the calculator has said, the recommended lay stake is $46.44. So we have essentially underlaid here because when you lay 45, obviously you are laying less than the recommended lay stake. This is telling us to lay that because it's going to guarantee a loss of $6.81 no matter whether the horse places, whether it loses, or whether it wins. Right. No matter what, we're going to lose $6.81. However, with this one here, explaining a normal underlay, because this has been underlaid and the odds relationship here is good enough for an underlay, we then can lay $45, which is the recommended 90% of the $50 stake. Horse losing will actually just be this minus commission, which equals this. But when the horse wins, we will actually lose a little bit less. So our loss on that three-sided dice for the horse winning actually decreases because this relationship between these odds has actually become better. I think the cap for 90% on $3 is actually like $3.40. That would actually, I'll go through the calculator in a second. But point is, we want to lay 90%. If I've lost any of you there, you need to go back and look at the table that Steve's going to create. But essentially what we're going to do is we're entering into this position. So we're guaranteeing a loss here of essentially $3.50 at the minimum or $8.15 at the high end. And what that happens, this will be the same. For any 7% race, whenever the horse loses and you lay 45, then you're going to lose $8.15. All that is $5, which is the gap between there. You've already lost $5 there, and then you've lost the commission. Now, 7% of $45 is $3.15, which is the extra $3 there. So every time the horse loses on the horse promo method, and you've laid 90% on a 7% race, you're going to lose $8.15. That's if it places as well. So if the horse doesn't win, $8.15 lost. However, what we want is to then get a bonus. And then if you're getting a $50 bonus, you've lost your $8.15 to get the bonus. And then, of course, we turn that bonus over an average of 80% long term. And, of course, we make about $32 because $40 is 80% of 50. And then you minus your $8.15, you'd profit $37.85. I should have not lost you there so far. So let's go into the actual calculator on the website. So in this example here, we are actually doing the exact same thing. So $3 odds. $3.30 lay, 7% commission, and we're going to lay $45. Now, same thing. Now, let's just tweak this and put $3.35, and you'll notice that this will drop, right? But we're still in an underlay territory here. If you go up to 340, where it's literally still in underlay territory, and then you go to 341, we're now in overlay territory. So the actual limit on $3 would be $3.40. That would be the absolute limit, because now you can see that we're actually guaranteeing a loss of $8. Whereas if this was now 320, you're obviously going to win more or lose less if the horse wins, right? Because this gap has decreased and the liability of this bet here has actually reduced. Look at that. There's your gap. $6.43 has been reduced because this is so close. This will stay the same. We're still going to lose our $8.15 on a 7% commission race, laying 90% at $50. Pretty straightforward. However, let's just go to, I don't know, you might find a horse at $2. Let's find the limit for $2. That's still underlay. 230 is too high. I think it's 229. Yeah, 228, 229. There's your last one. 230 is over. So $2 and 229 is your limit. Let's go to $2.20. Probably about 255 maybe. No, 254, 253, 252, 251. There we go. These will be on your table, but essentially what you're going to be doing is making sure that you know these relationships, and then you can just lay your 90%. Even if you're doing the horse promo method on, let's just say, like a $30 unit size, you would then know that you're going to lay 27. Your aim is to lay 27. So you change that. And as you can see here, that is an overlay. So that's no good. $2 and 251 is no good. We already know that 229 is the limit. As you can see, if you go to 230, you're overs. You go to 229, you're good, because that's more than 227. So knowing these relationships, you should then be able to go back lay and just know the odds, right? And obviously when you're betting on a Saturday, there's going to be a lot of liquidity in the market. A lot of money is getting pumped through these markets. So you're going to get opportunities to actually lay, which is going to be good. So this is the horse promo method. Also, obviously, when you go up in price, the gap will get larger. So you can go 330, as we know. You can even go 340, as we've just explained. If you went to 4, you could go probably 450 maybe. Just 451, 452. You can go as high as 451. So, and then 5, obviously you probably go to like 550 maybe. Yeah, you definitely can. 570, definitely not. 560, definitely not. You can. 560, 562, that would be the limit, 562. So the only problem is when you go to higher odds is when the horse wins, you're going to have a bigger retail balance. So obviously that will go to $150 and you'd profit 120 on your retail side for $30. If you go to 50, going back to 50, we're going to go 45. That is going to be too high. That's going to be fine. So you could technically get into this position and you're guaranteeing a loss of $8. And then if the horse wins, you lose $7.90. If the horse loses, you lose $8.15, but you get the bonus if it places, right? This is pretty much what you're going to be entering into. Now, you've seen the math there on the calculator. Now, I'm just going to dumb it down, simplify it so it's actually in numbers, right? So when we say 16% here, this is probably quite overs. As you could see, when you're getting really good matches, i.e. 3, 320, 2, $2.20, you're not going to the absolute maximum of the limit like 5 and 562 or 2 and 229 or 3 and 340. If you're getting 3 and 320, 3 and 330, which you should be able to get, you're not going to lose 16% if the horse wins because your liability is going to be reduced and therefore your overall loss on that outcome is not going to be the full $8.15, which is 16%. It's actually going to be probably closer towards 8% or 2%, or you might get in a position where you've actually got a really good match and you actually only lose like $1, which is bloody nothing. It's like 2%. So of $50. So that is your first outcome. The second outcome is the same thing, right? But remembering this is always going to be 8%, 8.15. It's like 16.3%, meaning that when the horse loses, you lose the money on the gap. When you lay 90%, you lose the $5. You lose 10% of your stake, and then you pay the commission on that lay amount as well, which is whatever it is. So you're losing 16% basically at a maximum on both of these outcomes. However, when the horse places, you then lose this 16%. As you can see here, you lose the 16%, but then you get a bonus bet, which you then turn over at an average of 80%, meaning that in this scenario, you actually gain 64%, which on a $50 size is $32. And that's where you see that three-sided dice, right? That is the horse promo method. So on the $50 bet, if the horse loses, you're going to lose anywhere from $0 to $5. I've put $5 there because most of the time when you are laying at these matches, you could easily change that to $8 if you really wanted to be crucial and match it up here. But the reality is you're not going to be losing that full $8 every time the horse wins. So we're going to round this down. Probably at 5 is what's going to be the average when it wins, probably even lower. You're going to lose your $8 every time it loses and doesn't place, and then you're going to make your 32 on average every time it places. So that is it. I'm going really slow here, but it should be making sense. Now, this is something that I want to walk through on a spreadsheet in a second. But what's going to happen when you do the horse promo method or any method where you have a downside or a possibility to actually lose some money in the short term? You're going to have what's called variance, right? You're not going to just get, yep, promo hits, doesn't hit, promo hits, doesn't hit, and then you just make money. You're going to have periods where you might lose 10 in a row, or you might miss 15 in a row, or even 20 in a row. And it is on you to not change your method. Remember, this is just math. So if you get to a point here, if you look at the net cash here, essentially what I've done here is every time the horse wins, I've done negative $3.50. And then every time the horse places, it's going to be plus 37.20. Why 37.20? Well, what happens there is you're actually losing the $8.15 and then you're gaining the 37.20 from the bonus. So what you'll see here is I've actually tracked this at a 75% bonus turnover on average because none of them have actually won. The reason why we're going to get an average of 80% bonus turnover in the long term with the way that's taught in the Platinum Squad is not because you're going to get 80% on every bonus. You're actually going to get 74.4% on every bonus that loses, but every time a bonus wins, you're getting 150%, 120%, 180%, 300% sometimes. And as a result of that happening, that'll bring the average up to 80. So in this example, I've actually gone really conservatively, and every time you've turned over a bonus, I've said that it's lost. So whenever the horse loses and you lay 80% and you've turned that bonus over, you're going to make 74.4% on a 7% commission race, as you should know by now. So this is actually under tracked. We're tracking this at like 74.4% average. Platinum Squad members following the instructions should be averaging 80% long term. So this horse obviously placed, this horse won, this horse placed, this horse won, this horse placed, this horse placed, and we got a bonus. We turn the bonus over, right? This is what's going to happen. So if you do the math there, you're still down, right? -8, -3, -8, -3, -8, -8. What do we get? Negative probably like 40. And then we're now plus 37. We'd be around break even there. Then we lose another one. It placed again. We got another bonus. We turn that over. Now we're positive, let's just say like $30 or so. So I'm literally going to walk you through this on a spreadsheet in real time so you can actually see it better. And this is, obviously this is not going to be what's happening because you're not going to place 20 promos in a row with bonuses, obviously, for your sustainability. But what's happened here is we've gone ahead and showed you like around about sort of 20 horse promotional data points, right? And every single one of these races, we've backed a horse and then laid it and then shown you what can happen, right? Now, these are not real, these are made up, but it's an example of what happens, right? So don't look at the ones below, just look at where my cursor is on the screen so you can understand. Essentially what's happening here is we're getting ourselves into position to do the horse promo method, right? Now, we're mixing up the bookies as well, and we're mixing it up one per race. So I've gone here and done 20 races on Saturday, from race 1 at Caulfield all the way to race 10 at Randwick, and race 1 to Randwick to race 10, whatever. We've gone from race 1 to 10 at both Caulfield and Randwick, right? And we've hit one horse in every single race. Now, this is obviously not what you would do because there's other sustainability things that you can do, but this is an example. So obviously there's 3 possible outcomes. When the horse loses and doesn't place, it's a loss. When the horse wins, it's a win. And when the horse places, it's a bonus, right? That's what we want. We want these bonuses, right? There's 6 that actually happened on the 20. Now, that might be slightly overs, it might be slightly unders, but in the long term, you can see what happens when you put yourself in a position where you have a higher upside compared to a lower downside. So on the first race, we backed it at $3, we laid it at $3.30, we laid our 90%, $50 back, $45 lay, 7% commission. What I should probably have put here is the fact that the Randwick races are actually 10%, which I've just noticed. So what we're going to do is slightly tweak those ones, but I'm just going to keep this raw so that you can kind of see and go through and then just change all the 10% races. And we're going to leak a little bit of profit on commission here. Let's just see what the damage is after all of that. Yeah, I think we had like $96 before. Now it's like 86. So you can see like the 10% commission can definitely eat into your profit. So you'd be probably a little bit tactical on your bonus turnover. For example, here, I wouldn't be turning over bonuses on a 10% race full stop, just because we're leaking profits for no reason. Now, what you'll find as well is that if you go into a 10% race, you'll probably have to tweak the table. Like the table's not going to be the same as the 7% race. So you're going to have to know the differences between the two tables as well. It might get a little bit confusing, but generally speaking, they're in this like similar vicinity. And to be honest, like $1 here or there either way is not going to change things in the long term, right? We've still got an edge. So basically what's going to happen, we've gone into Caulfield, we've backed a horse, we've laid it at 330, 7% commission race, it lost. We lost $8.15, which is a standard back lay within the range, laying at $45, 90% for a $50 bet size, you lose $8.15. On the next race, we were at Randwick and the horse actually ended up winning and we backed it for $3. We laid it at 330 for 90%. And then we at horse won. So we lost $3.50. The reason why we didn't lose $8.15 is because this is actually a good match. And because of the relationship there, we didn't lose as much. The next one, again, we went to Tab. Horse A, race 2 at Caulfield. Backed and laid at $3 and 330. Laid 90%. It lost. We lose another $8.15. Next one, won again. Next one, placed. And then we finally hit a bonus bet, right? On race 3 at Randwick, we hit it on better. We backed 50. We laid 45 at $3.30. 10% commission race, annoying, but we kind of lost the extra $9.50. We lost the extra dollar and what's that? $1.35 compared to an $8.15 race. And then we turned over that bonus for a classic 80% lay, laid 80% of the back amount, turned that over for a profit of $37.20, which is an average of 74.4%. So add these up. We had 5 misses, essentially. These all missed. The horse either won or didn't place. That's a miss. That's lost $31.45. We then had the next one, and between this, we made $27.70. We're essentially break even. So it's taken us 5 losses and 1 win, and we're break even, essentially. Look over here. We're down to $3.75. Not quite in profit yet, but we've obviously just shown you that is 1 upside, and this is 5 downsides. So you can see 1 upside is almost the same as 5 downsides, right? And we've also been stingy with commission as well by going into Randwick races. But again, we have an edge, so you can probably get away with that. More so the bonus turnover, we wouldn't do 10%. But then continuing on, obviously the next race, we hit a 7% race again, and we actually got it again. It placed bonus, and we lost to $8.15. And then we hit the bonus, turned it over. Obviously, you hit a 10% race, which is stupid, but it is what it is. We turned it over for 72%. We made $36. So in this example here, we've actually made another $27.85. So we're in a position now where we're actually in profit. Then the next one, lost. Next one, won. Next one, placed again. No, lost. And then that placed. Turn it over again. And suddenly you can start to see this graph really start to move up. And by the end of 20 bets, you're now sitting in a position where you're plus $86 and you've been really kind of relaxed on the turnover on those bonuses as well. Like if you've gone and turned these bonuses over, let's just turn over all the bonuses on 7% races. I'll show you what the difference would have been. Let's just find bonus. There's one there, 7%. There's one there, 7%. There's one there, 7%. Already done that one. And then we've done that one. All of a sudden, and I think there's one more at the bottom. Yeah, 7% commission there as well. Bang. So all of a sudden, now your profit's gone up to $90. So it's only $4 in the end. I thought it was 96 before. But point is, you've leaked a bit of money there just on commission. But if you are sticking to this, in the long term, as you can just see, this has been like, how many losses have we got here? I think we've got 14 losses 14 misses and 6 hits. Right? Every time the horse hits, placed, it happens 6 times. 1, 2, 3, 4, 5, 6. And we entered into 20 races. So even though we have a measly hit rate of, 6 divided by 20, which I think is 30%, we're actually in a position where we've profited almost 2 times our unit size. So we're sitting at a profit of 90 when our unit size is 50. So essentially we've profited like 1.8 units on these outcomes. Now that's not fantastic, but it will make money in the long term, right? That's a profit of $90. Right now, you might have got 8 out of these, right? Now, you might have hit 8 out of 20 on 120 sample size. You might hit 8 out of those 20, and then all of a sudden you've made a lot more than that. You've made 140 or whatever, 150 even. So this is what happens. In the long term, this will just keep going up, right? This is lower downside, higher upside. And that is what happens when you are following these methods. Hopefully that's made sense to actually see it. Obviously, you're going to get a little bit emotional, potentially, if you are seeing something like, 6 in a row that have lost or 10 in a row that have lost. But like the damage isn't even bad. It's not ever going to get your bankroll to 0 if you're sticking to the correct unit size and you're not doing anything stupid. So just stick to it. Now, this method obviously isn't the best method. Obviously, the horse system shits all over it when you compare dollars spent, but it's a great method to learn the principle of upside v downside, to learn the principle of positive EV, and then to learn the consistent staking size and the emotional control and learning Betfair and making money. So practice it, but as soon as you can, get into the horse system because it's better. The downside, I'll go into them in a second, but there is mass upside using the horse system via the horse promo method. So just reiterating, this whole concept is literally positive expected value. In the long term, because there is a built-in edge, it is mathematically impossible to lose long term, assuming correct bankroll management. If you randomly start staking different amounts on these bets and you don't consistently stick to the same consistent thing over time, of course you're not going to win long term because it becomes random. Like you're betting sometimes 150, sometimes 50, sometimes 10, sometimes 6. You might hit one where you've only staked $5 on it and that's your hit, and then you've staked 150 on one of your lost ones. Of course you're not going to profit long term. This is what gamblers do. But if you're sticking to an edge and then you have bankroll management, consistent unit size, you literally cannot lose in the long term. Make sure your bankroll is correct. Make sure your unit size is consistent when you do this method. If you do those two things, then you literally can't lose. And when I say bankroll is relevant, I mean like amount of units you have. So technically your unit size on a $50 bet, if you're following instructions, is actually $8.15. That is your loss. Because the horse promo method technically doesn't have a all or nothing loss, like the horse system. When you place a $50 bet on the horse system and your unit size is 50, you're not laying, so your unit size is 50. But on the horse promo method, your unit size is actually the maximum loss, right? The maximum loss, if you're following the instructions, laying $45 of that 50, which is 90%, is actually $8.15. So for you to lose 100 units, you'd have to lose $815 to get to that. That might not make sense, but it should once you understand the 100 unit rule. If you're part of the horse system, you'll understand that now. But what I'm saying is don't over bet compared to your bankroll. If you only have $200 bankroll and you're betting with $50 bet sizes, well, you don't have to lose that many in a row before you go minus 200. Whereas if you had $1,000 worth of bankroll, then you could comfortably do this. The only problem is you might run into is the fact that you have money that will end up in retail and then that gets stuck, but we'll talk about that later. So some factors to consider is an analytical edge. So when we talk about mathematical edge that comes from the promotions, everyone has that, but not many people actually have an analytical edge. An analytical edge is going to come from you actually making your own system or adding other factors to actually increase your edge. Now, most people don't know how to make their own system, and your own system takes years, right? People think they make their own systems, and punters think they do their own form and all this, but in reality, they're just losing money because realistically, the odds are the odds. The bookies have already done the form anyway, based on the odds. But back to the point, an analytical edge is going to help you to increase your chances of getting into a position where you're not getting yourself into a lower chance of hitting races, and also potentially getting yourself into a position where you're entering into races where you shouldn't be, right? You want to enter into races where you have the greatest chance of hitting a place. Remember, we're not trying to hit a winner, we're trying to hit a place. And if there's 25 horses in a race, if you use mathematics and logic, well, there's a lower chance that your horse is actually going to place when there's 25 horses versus a 6-horse field, right? Yes, the odds are going to reflect that. The bookies are going to reduce the odds of the horses in the race, but that's not relevant to you because you're not backing the horse to win. You're backing and laying it, so it's irrelevant, the odds, essentially. But what will happen if there's 30 horses in the field or 25 versus 8? Well, numbers just say that it's actually a higher chance of you hitting a place in a smaller horse field. So a rule that you want to hit is you want to look at the number of horses in the race. Common sense says you probably don't want to be hitting races where there's 16 horses in it or 15, whereas you probably want to get a little bit more aggressive in those races where you are actually doing 8 horses or 6 horses or 7 horses. You just have to be wary that some bookies don't actually offer a promotion on those smaller races where there might be like 5 or 6, or depending on the rules of that bookie. Companies like Sportsbet don't even have a minimum, but at the time of filming. But point is, you don't want to get into a race where there's too many horses because you're reducing your chance of hitting that place, because obviously the higher the amount of horses, the lower chance probability-wise is of the horse placing. So aim for races with less horses in them. Try to avoid races probably that have 14 or more because there's a lower chance you'll actually hit in those races. So therefore you're reducing your downside by actually not entering in a situation where you have a lower edge, if that makes sense.
in theory, as I said, the less horses, the more chance you have, but the odds are going to reflect this already. The other thing as well is you probably want to hit horses at the top of the market, favourites, because they're more likely to place in general, right? Horses in the top of the market are priced because they are the better horses, according to the market, and therefore they are higher chance of actually placing. So it would make sense to hit those horses more. As well as that, the benefit of that is actually when you are betting and laying on Betfair, you actually have reduced your liability. So you're not going to blow up your Betfair and reduce it to zero. If you're going back a $15 horse because you found a nice lay at $16, then you probably, if you go and put $50 on that, like your Betfair is going to get drained by $700 or $750 according to the lay. So that is a downside. And obviously then if your bankroll's a problem, then you've got $750 sitting in your retail account and $700 came out of your Betfair account because you whatever. So that's something to think about. The other thing as well, you don't want to overlay, right? As I was saying before, learn the tables. It doesn't have to be a perfect match, but just know the tables, right? When you see these scenarios and you see 3-3-40, you know that's the max, right? You see 3-3-30, you know you're under. You see 3-3-20, you know that's a good match. So you can enter into those positions, but it doesn't have to be perfect. Don't wait, put it in, take SP, and then Bob's your uncle. Just execute really fast. Get it done once you've learnt this, and then you should be fine to just execute. And eventually it will be like tying your shoelaces. The closer the match, though, the lower the downside, as we said in the long term, right? Whenever the horse wins, your downside is technically lower because you've then got yourself into a position where you have reduced your loss every time that horse wins. Yes, cool, it's not the most optimal outcome. We want that horse to place. But if you're losing $3 every time the horse wins instead of $8, well, then you're plus 5 on that exact dice roll, if that makes sense. Now, if the odds don't match, you have 3 options. You can find another horse, you can decrease the lay stake and still enter into the position. This is where it gets a little bit tricky, but I'll show you in a second on the calculator. Or you can skip the race, right? What I mean by this is this. Let's just say you go back to the $2.50 and we'll go with the example we were using before. Let's go $3. And then it gets to like $3.50, right? And we're on a 7% commission race. We're still at $50. Now, obviously this is an overlay, okay? This is now getting an overlay territory. So if that horse was to be laid at $45, we would actually lose $12.50 if the horse wins, because as it overlays, we then lose more money on the liability. This liability is more than this, therefore this is going to get increased every time the horse wins. This is still going to be negative $8.15, right? Because we're still laying $5 less and we're losing the commission of 7%, $3.15. $8.15 is just literally 5 plus $3.15. But going back to this, if you want to take this position here, you still can, but you have to reduce this. Maybe do 43 or 43.5. Now, this is going to be a bit more tedious, but if you're sitting there and you still want to get into that position of that race and take that horse promo opportunity, now, this is going to be a test of your emotions. You might be like, whoa, well, I really want to get into this race because there's 6 horses in the race and it's a good match and I want to take it because I think it's a good chance of happening according to the rules. Then, of course, you can still enter, but you just need to be aware that you've raised your downside by doing this, right? You've raised your downside now to $9.55 if the horse loses. So now you've raised it by $1.40 versus $8.15, but you'll still get your $50 bonus bet if it comes back. So you're essentially just increasing your downside a little bit. Your upside remains the same. So just be wary. That's your third option, right? You can still enter into the race if you really want to, but remembering, don't just do this for the sake of it. Most of the time, you're actually going to find matches within the range anyway. Like at the absolute max, you'll probably find that. But point is, if you do get to that higher end of the table, you can probably reduce your lay stake a little bit to like 44.50 or 44 if you want. But reality is all that's doing is increasing or decreasing the downside if the horse wins, right? And you're obviously increasing the downside if the horse also loses because you're now staking only, 88% rather than 90%. So obviously that's something you need to consider. So those are your 3 options. You can either find another horse, you can decrease the lay stake, you can find another bookie as well. Just because you're looking on one bookie, go look at another bookie. You might find better odds and then you can take a match that's better. Or skip the race, right? You're not going to enter into every single one of these races, right? If they don't match, don't take it. Move on to the next one. There's going to be more opportunities in the future and you potentially might have saved yourself some money because the match was shit. Right, so your checklist. You want to have a look at the number of horses on the race. Once you've ticked that off and you're comfortable, jump into starting to look through the bookies. You're going to select your bookie. You should have multiple bookies open, but once you've selected the bookie, you've seen the correct odds that you want, take it, back it, identify the target horses, execute the back and lay efficiently. Don't fluff around, just execute, right? Now, do this maybe 3 minutes before the race, 4 minutes, 5 minutes even on high liquidity races on a Saturday, and you'll find that if you have Take SP, the markets will move enough most of the time where you'll get your bet matched. Right? If they don't, well, you got Take SP in there. Just remember the liability rule of minimum liability for Take SP is $30, and if that doesn't hit and your bet wasn't confirmed before the race started, your bet will get cancelled. So minimum liability is 30. Just remember that if you have Take SP. Practice with low stakes first. Now, again, just a little disclaimer, if you're doing that $30 minimum liability thing, don't be shocked if one of your bets doesn't get actually confirmed on Take SP if you actually don't execute it before it gets the race starts. Just be aware of that. If it doesn't have a minimum liability of 30 and it doesn't get matched, it's going to get cancelled and not get taken SP. Track in the spreadsheet, track the result, turn your bonus over, repeat. That's it. That's the horse promo method. Now, some other points to consider. Variance is going to happen. I've kind of touched on this. You might get 20 in a row. You're not going to hit exactly every single third one or every fourth one. It's going to happen. You might lose 10 in a row and then you might hit 4 in a row. So these things are going to happen. Just stay disciplined. You might miss 20 in a row. Do not change your method. It is just math. Remember that. Do not let your emotions affect mathematics. Mathematics don't have emotions. They're just math. So make sure you understand that. Sustainability reminder on new accounts. We're going to build up this promo staking over the first 1 to 2 months. We're not going to go straight into opening an account and then start staking $50 on promos because you want to do the horse promo method. You can't do that. You'll get banned quickly. Remember that. Vary your stake as well. Don't just always bet $50. If you vary your stake, be wary of the 90% rule. So you might bet 40. You then have to lay, 36? That is 90%. So you get these numbers in your head so you're kind of understanding it. Don't bet on every single promo race. You're going to get banned. All the other sustainability rules apply. So mix up your stakes, do your non-promos in between races, do your bonuses in between races, do all those things, mix things up, and you should be fine long term. Now, increasing your unit size, you can obviously put more on the same selection. That doesn't mean you can only do 50, right? You can put more on the same selection. When I used to do the horse promo method, I used to do $200 unit sizes before I worked out that the horse system was way more profitable. That's what I did, right? And I'd obviously have to lay accordingly. So $200 units, you might have put the same bet across 4 bookies, $50, Ladbrokes, Tab, Sportsbet, and I don't know, Palmer Bet, and then you lay 90% of that, which is what, 180, and all of a sudden the horse hits and you get $200 worth of bonus. Your loss was whatever it was, $20 minus 200 times 6% or 7% back then. And then all of a sudden you've made a solid amount on that turnover. You made like $120 or whatever it is on that race. And that's a way that I used to do it. However, don't overlay, lay accordingly, and just be aware that whenever those horses hit and you've got 4 bets on them, I wouldn't recommend doing this full stop. But the downside to this is the fact that the liability on Betfair is huge and you can drain your bankroll pretty quickly with a couple of winners. So that's why the horse promo method is inferior to the horse system. Because of that, it requires a lot of effort and time compared to the horse system, and that's something we'll get into in a second. So the downside of using an increased unit size, as I said, is increasing the liability, which requires more bankroll, and then it obviously requires more time and effort and more chance that something is going to go wrong, because when you're doing bigger stakes on Betfair, you will identify opportunities. You'll probably get yourself in a position where you will make mistakes with those bigger bets. So personal story, I used to do the horse promo method in 2020 when I was heavily match betting. I think I was doing anywhere from $200 to $400 unit sizes. And probably in one of those periods, I came across a bit of a light bulb moment where I worked out that the method that I was using was actually way inferior to something else that I'd known about, but I wasn't actually taking advantage of, which was the horse system. And it was pretty annoying, to be honest, when I found that out, because I worked out that all the profit that I could have been making with the turnover that I had been doing with that crazy amount of money, I even got someone into my house working with me to actually help me track my bets and help me with my operation. But I actually had the light bulb moment where I realized that, I actually have wasted a massive amount of upside here, because when I then compared the results of what I was doing with my spreadsheet to the horse system equivalent with similar basically bets, I worked out that the horse system was way more profitable. And that was probably cost me, I reckon, maybe like $20K during that period of 6 months, which was quite annoying. But the point is, why I'm telling you this is because, yes, the horse promo method is great. It works. It helps you learn shit. It helps you understand upside downside. It helps you understand positive expected value. It helps you stick to a consistent unit size. Helps you manage your emotions. But reality is it has nothing on the actual horse system itself, because of the horse system being more of a higher upside higher downside method. When I say higher downside, I mean higher than the horse promo method, but the reality is the same principles apply. You just have a much higher upside with the horse system, which means you make way more profit in the long term. And going into this, comparing the horse system now to the actual horse promo method, the advantages of the horse promo method is you're going to have less variance. So there's going to be a lower downside, as I've said just then. You're going to do it on your own versus needing tips. Obviously, the horse system sends out the tips next in run, and you get those tips to your phone, you place the bet. But the horse promo method, you can technically turn your phone on the middle of a Wednesday and hit a promo, lay it on Betfair, and potentially you've made some money. Obviously, you have made less money in the long term, but you are still able to do it a bit more flexibly without having to follow the tips. That's an advantage. Disadvantages, lower upside, less profitable per dollar spent, more effort required, more time required, and you can have massive Betfair mistakes and concentration mistakes as well. You need more Betfair bankroll because it gets drained. So there are your disadvantages. There will be an additional video on this which actually walks through the horse promo method versus the horse system. But in summary, this method itself is a great method to learn. It is a fantastic method to know how to understand upside downside. But the reality is it is something that shouldn't be probably used for more than a couple of weeks before you start thinking about jumping into the horse system. It is the far superior method. Obviously, if you have, footy on Saturdays and you can't jump into the horse system, obviously hold off and do something like the sports system instead. But reality is if you're doing horse system v horse promo method, like horse system shits all over it. And the convenience and the lack of effort required with the horse system, because you're only backing, you're not laying, and don't have to look at the Betfair odds. You just have to place the bet on your phone or place the bet on your laptop. You don't have to look at matching the lay odds, turning over the liability, making sure it's all correct. You just get the job done. You follow the tip, you follow that process. And then after 3, 6, 12 months, you've made a lot of money. That's the difference. So that's the horse promo method though. I might leave some examples. There'll probably be a video on the actual horse promo method in more detail after this one, but that is the theory of the horse promo method. You should have now a solid understanding of it. And if you have any questions, there'll also be that table video as well, which Steve will run you through. Refer to those tables, make sure you remember those rules. And if you have any questions, discuss them in the Discord. But make sure you understand that this method is great to learn and understand, but it's not the most superior method with the horse promotions. That is the horse system. See you with the next video. So that video was taken out of our Platinum member content. In total, there's about 30 hours of Platinum content, which is accessible for life once you join that. There's 1,350 members who are currently part of Platinum as of October 2024. And there's also things like a bookie list totaling over 3,500 worth of sign-up offers. There's a spreadsheet tracker, there's bookie ban bots, there's sign-up bots. There's a Discord of 1,350 members, there's weekly webinars. But before you actually get to that, you need to go into our free course first. From there, book a free call. You'll find both of those links in the description of this video. I can't reiterate enough, if you are serious about doing your match betting properly, set things up properly from day one. If you're just starting out and you want to learn more, I would highly encourage you to take your time, work your way through the free content, and then find your way into Platinum once you get there. From there, you can jump into the horse system, sports system, and then if you want to be an absolute baller in this space, you can get to the mentorship program where you make your 10K, even higher per month, which some of the most advanced members of our community are doing. But if you like this video, give it a like, leave a comment if you have any questions, but do those 2 steps. Free course, free call. We'll see you in there.